is at 17,161. And look who's here. This guy is the bear, the articulate bear. His name is Jeff Sica. He's one of the guests who said we would see 16,000 before we see 18,000. And he's going to ruin our Friday morning by repeating that, aren't you?
Yeah, that's why I'm here to ruin everybody's Friday morning.
That's right. Okay, but seriously, you're still bearish.
Yes.
You still see a decline coming.
Right.
It's a big one.
Yeah, here's what I see. I mean, first of all, why investors are choosing to ignore earnings is baffling to me. We're worried about a recession. If anything, earnings and what these CEOs are saying from companies like GE, Schlumberger, Netflix, they're really talking about an economic slowdown, which is far greater than anyone anticipated. Now, if that's a reason to buy stocks, I don't know what.
I'm going to quote you again. An economic slowdown far greater than anyone anticipated.
Right.
Recession?
Yeah, because here's the thing. We've had this tremendous focus on the stock market. So people have anticipated because the stock market's moving up, we can't be in a recession. But in reality, we've had negative earnings. This is going to turn out to be among the worst quarters we've had in earnings in several years. And if that doesn't point to a recession, I don't know what does.
That's because the markets have been overinflated thanks to the Fed, right? They're not based on fundamentals at all, and it's the earnings that really are telling us the true picture.
Right.
Is that true?
Right. Exactly.
Jeff's right. We could have back-to-back quarters. We haven't seen that since 2009. Back-to-back negative quarters.
That's a recession.
Profit declines.
Yeah, technically.
And
for
keep in
profits,
mind,
not for profits, not for growth just yet.
Okay.
Yeah, and these low borrowing costs. So these companies are going out, borrowing as much money as they could borrow, buying their own shares, inflating their share prices, adjusting their earnings per share to make them look better. A lot of smoke and mirrors. And I think when you look under the smoke and mirrors, what you see is an economy in peril that really needs some sort of substantial, real growth.
We were all flying high. Jessica Tarloff and the Democrats and politics. I was on a roll, and you bring me.
I had to take the air out of the room.
Yeah, well, that's your job. You're a Wall Street guy. Jeff, thank you very much, sir.
Thank you.
Look at Netflix, please. The company having a rough go this week, reporting less than stellar subscriber growth, suffering a 90-minute service outage yesterday. That's important. The stock's right there at exactly 100, down a little bit. Jeff, you still with us?
Yes.
Yeah, I know you're still with us. I can see you right there, lad. Now, I don't know whether you follow individual stocks.
Yes.
You want to comment on Netflix?
Well, here, I said back in 2012 very publicly that Netflix owned the entertainment industry. They do, in fact, own the entertainment industry. Everybody else is a second player to them. What I will say is that they are an indication, however, of an extremely good company. Very good, very well executing company, innovative, is now starting to experience some of the slowdown that the rest of the economy has experienced. My thought, and before earnings season, if Netflix suffers, the consumer's suffering. If Netflix suffers, it's an indication of what's to come. They're suffering, and despite of the fact of still owning the entertainment industry and still being the top dog.
You're very articulate. You really put it well. I understand every word you said. No chance will buzz you. Jeff Sica, everyone. Thank you very much, sir. Appreciate it. All right.